All right, testing, 1, 2. Oh, wow, look at the camera. What's going on there? Holy smokes. It's weird. Makes my hair look white. Makes my face look fat. Stupid camera. This is the worst camera. Oh, why is it all washed out? It has something to do with the lighting. The lighting's... I don't know what it is. Anyways, good morning, everybody. G'day, mate. All right. Let's go. Yo, yo. Yeah, boy. Yeah. 20 dwarves. In sooth, I know not why I am so sad. It's sooth, I know not why. All right. Mate. Good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I'm a currency trader just like you, and my screen is completely washed out today. Holy smokes, what's going on? Anyways, I've been trading currencies a long time, and I'm here to share with the overriding goal of helping you put together trade plans. I preach to teach, because some of you never had this. So yeah, it's all about trying to figure out what's going to happen tomorrow. I'm not even interested in today. Today is already done. Money in the bank. I have already boned the fish, fried it all up. So anyways. Yeah, it's, but I haven't changed anything since yesterday or the day before, Mr. Highvolt. So that's it, right? Screen's in the back too bright, I guess. Well, it worked yesterday. It worked yesterday. So anyways, I want to teach you how to plan your trades in advance. That's all. You can ask me questions as well. Technical and fundamental analysis is fair game. Trader psychology always seems to trickle in there. But I want to help you succeed. Also, the people at Traders Way want you to succeed. So if you find these webinars valuable and an important part of your daily routine, then please pay it back. Visit tradersway.com, open up a trading account. When you're ready to trade real money, choose Traders Way as your broker. Yeah, I guess it is Venus, huh? I thought I was a Mars dude, but... Jaime says ugly weather this week. You know what? I opened the door to let the dog out at like, I don't know, 6 in the morning, 5 in the morning, whatever it was, and it was warm. Like warm. I'm like, it was colder in the house. Oh, please. So anyways, tradersway.com. They're good people. They care about you, and which is pretty rare for a broker. I stink. Anyways. Okay. All my kids are sick, so be careful. So anyways, here we go. Let's do around the world. Let's start with Bitcoin. Why not? Why not? So, how many people remember it this way? That we said that Bitcoin was OOP to look for a CT back to the CPP. I think it was yesterday, wasn't it? Oh, Hope said, I took it. But we did talk about that, right? Anybody remember all that? OOP, CT into the CPP. Cool. Out of position, counter trend trade to the central pivot point. Drop the mic. That happened. Snap. Huh? No? Yeah? Thank you, technical analysis. I'm so happy that worked because I put it in my book. So thank you. Cool. So that's just part of swing trading. Good morning, Carlito. Neat, right? Neat. Very neat. So it's fair game. It can do whatever it wants now. I think we were talking about 955555555, but whatever. Neat. That's all. That's all I'm saying. All right. Gold. Not much going on, actually. Slow as gold. Okay. And just to recap, just to make sure you're on the same kind of clue train, we're sort of like in a mediocre sellish move and a more decently buyish move. Okay. And the buyish move seems more believable. Okay. And the reason for that is where it started its trip, and it should be doing this. But honestly, stuck in the middle. Right? In the middle is not a good place to be trading. So, anyways. And WTI. And we're just still farting around this $50. Still farting around. Okay? It also means that if you look at this from a 15-minute point of view, how do we put this together? Like, I suppose like this. Okay? Bulls are buying down in here, and bears are selling up in here. It seems they're doing their job. This looks like a bullish zone. This looks like a bearish move. So being stuck in here, you're fighting the bulls and the bears. Okay? Who's likely to win in there? Not really sure. What about here? Yeah, there could be a move down. Okay? You see what I mean? You're waiting for the jobs number before taking trades. Yeah, no, Michael, but it's the general move has happened. Where it ends up going is one other thing, and it probably may not, but let's go back to the Bitcoin. Okay. What I was saying about this, an OOP means that you're out of position, you're going to hit your target early, and there will be profit taking. Okay? That's all that means. Now, the general guideline is to the central pivot. Okay? But it's a guideline. The biggest thing is what a lot of, let's say, what many traders do is they see this upward move and they become aggressively bullish and they start buying high because they're aggressive. And with with sort of knowledge of how price action works, this is in fact a profit-taking scenario, which creates a counter trend. And like I said, it often goes as far back as here. Doesn't have to. But what does it reinforce? What we talked about 2 weeks ago and 3 weeks ago. I'm trying to get erases. And that is, if you're a bull, you have all the permission in the world to be a bull, but you have to trade like this. Okay? Okay? See what I mean? And so, let's say less experienced traders don't expect this, and it freaks them out. Anticipating the pullback is helpful. Okay. That's all. All right. All right, let's do some basic analysis here on euro dollar. Okay. Down, 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 up, up, sell zone, and that's a sell. Right? Down, 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 up, sell zone, and that's a sell. Down, 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 up, this is a sell zone, so sell. Right? Down, 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 OOP, look for profit taking. Okay? On top of that, this is a central pivot, so that's predicting S2. Okay? So the counter trend would take place right here. Okay? That's what all of that says. Another way of doing this is from the classic book, Strategic and Tactical Forex Trading. Let me just clear that little drawing, whatever that was all about. Okay. All right, let's see if I can simplify this. Okay, let's use the moving averages for trading, okay? This is out of Strategic and Tactical Forex Trading, published in 2008, written in 2007 by Wayne McDonald. All right, cool. You ready? Down, 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 up, up. Sell. Down, 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 up, up. You see the moving average? Sell. Down, 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 up, up. 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 Sell. Okay? So in 2007, I was writing that you trade using the 21. If price is below the 21, you're bearish and aggressively bearish, and you're using the 21 as a dynamic level of resistance, in which you would hit it and then trade the 5-8 cross down. Hit it, well, actually trade the 5-8 cross down, take profit the 5-8 cross up. Sell the 5-8 cross down, take profit on the 5-8 cross up. Sell the 5-8 cross down, take profit on the 5-8 cross up. Sell the 5-8 cross down, take profit on the 5-8 cross up. And you'd be selling the 5-8 cross down now. And we'll get there, baby G. Classic, right? Sell, 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 sell. Anyways. Well, even better. Absolutely, Michael. Absolutely. Because the most of the charts in the book are talking about intraday trading, and that has to do with more of 15-minute charts. Okay. But generally, just think of these as like, again, like a ribbon. So why don't we can move it this way. They're all ribbons, right? Anyways. Okay. One reason I like this chart is that as long as I'm below the ribbon, I'm selling, right? You sell into the ribbon. Okay? And you'll stay short until the ribbon turns bullish, right? Or if you're a bear, you sell when the ribbon is bearish, and you don't sell when the ribbon is bullish. If that also makes sense. Okay. You see this? This is a 15-minute chart. So this is, if all you were doing was selling in the ribbon the last 6 or 7 days of trading, you would have done okay, right? You see what I mean? Well, but that's all the moving averages are doing too. Like, why are you buying below the 21? It doesn't make any sense. Well, in this case, I like this because it's so easy to see that it's bearish. So imagine last Monday, last Tuesday, last Wednesday, last Thursday, and last Friday you shorted. And you shorted again on Monday. Now that's called day trading. Does anyone feel like they're overcomplicating their trading? You're like, oh, that's easy. That's why I don't like it. Yeah, high five everybody. High five. Woohoo. Yeah, I don't like that. It's too easy. Then why isn't it so easy? Yeah. Remember, I tell you to just be a bull or a bear. If you were a bear, that's been good for you for 6 days in a row. Yeah, I suppose. But but why? Like, that's not hindsight. Yeah, complexity, yeah, is certainly not the holy grail, right? Yeah. Well, Heath, what you need to do is have a bias. That's the problem. If you don't have a bias, then you're trying to figure things out every day, right? If you have a bias, you look at this and you just simply say, well, it's still bearish. Okay? So one of these things, okay, will eventually produce something that's not bearish. So if it did this, you would stop, right, Heath? Or let's say you should start, right? You should stop. But we also know, Heath, certain combinations of indicators create obvious support. So you should be able to, at some point, anticipate where markets are going to review, right? So I'm just trying to show you, like, the tools you use don't matter, guys. It's that you're staying with your trend, you're staying with your bias. Okay? Well, the bias is important because, as Heath is pointing out, you don't know when these markets are going to flip. So what you're trying to avoid is you're the one flipping and the market seems to be doing right, and you get this chaos. Okay? So we're trying to avoid the chaos. So the way to do that is for you to be consistent. Okay? That's all. So if you're a bear, and there's lots of reasons to be a bear on euro dollar, you simply say weekly M3. Do bears sell weekly M3? Yes or no, guys? Do bears sell weekly M3s? Okay. Okay. And then you get a scenario like this, right? Is that a bullish scenario or a bearish scenario? So at this point, if you're already a bear, you have a lot going for you at this point. If you don't understand that, that's the problem. Okay? If you understand this, then what you're doing is you're talking yourself out, right? So lower high, selling the ribbon, lower low, lower high, selling the ribbon, lower low, lower high, selling the ribbon, lower low, lower high, selling the ribbon, whatever, right? And you keep doing this until you find yourself above the ribbon. Because you know being above that ribbon is unacceptable to a bear. Okay? But like I've been telling you, the ribbon isn't a secret. Like it's not a secret. It's just another tool to be helpful. Okay? That's all. You can change the template and you should see the same type of setup, but having completely different tools. You're like, ah. Okay? Completely different tools, but it's all the same thing. Okay? Right? Down, oops, now I got to change colors. Down, 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 up, up. Sell. Oh, look, it's in the sell zone. Down, 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 up, up. Oh, look, it's in the sell zone. Down, 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 out of position. Up, up. Look, it's in the sell zone. Down, 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 and it's out of position again. So we're going to have a big up, up at some point. Okay. Change the template again. Let's use different tools. Okay. Oops. Let me back out. Add some more time here. All right. This is the 1st of January. This is a sell. This is the target. This is the 1st of February. This is a sell. And this is the target. Let me redraw this. In my book, written in 2007, published in 2008, it says, if this is your entry, this is your exit. If this is your entry, this is your exit. How many people can confirm that? How many people can confirm that? Okay. Yeah. I mean, see, like, if you're missing this, right, then you're complicating it. You're doing something to distract yourself. That's the only thing I'm pointing out. It's not that you're bad or you're not, this or that. You're making something complicated, and you should probably slow it down. Right? That's what you should focus on. Say, well, why am I missing that? Because you're like, oh, well, that's obvious. Right? Now, here's the other interesting thing. You ready? You ready for this? This is why you need to stay consistent to a bias. Okay? This is a bullish entry. This is the bullish exit. Same book. Same book. Just flip the page. If you buy at the M2, your M4 is the target. If you sell at the M3, M1 is your target. These are perfect moves, guys. There's something to this. This is what I've found over the years. The only thing is I had to figure it out on my own. But, you're like, there's something to this. Right? Yeah, Michael, that I get a lot. Michael says, is anyone else here feeling sick when you see that you're not taking these? Fear of missing out and stuff. This is why I want you to focus your trading not on making money, but focus on training. So I worked on a demo account for a couple of years, but I never traded a demo account. I worked on a demo account. I practiced things. And the analogy I've used over the years is like taking golf lessons. Right? Where you go to an instructor and they say, okay, hold the club. Show me your grip. All right, aim. Okay, you're holding the club incorrectly, right? And you're aiming incorrectly. Let's start there. Let's start with balance. Okay? And you kind of start with that. He hasn't even asked you, or she hasn't even asked you to swing the club yet. We're just working on some balance. We're working on grip. We're working on aiming. Some very nice ground strokes. And eventually we get to swinging. But we're not swinging the driver yet. We're kind of just chipping the ball a little bit with a 9-iron, getting used to the motion, getting used to aiming properly. Every time I go to hit, we put a thing on the ground to show where I'm actually aiming. I'm like, oh, okay. And you see? And you work on very, 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 very specific things. Someone else goes to the driving range and hits a bucket of balls. And hits another bucket of balls. And hits another bucket of balls. Day after day after day, hitting a bucket of balls. What's happening to the person going to the driving range? They've hit 1,000 balls incorrectly. Right? They've perfected the slice. Slice. High and to the right. High and to the right. High and to the right. Okay? And there's a very different strategy. So what I've always suggested is that you open up let's start with the demo account. And you do things purely, not trading, but purely things like entering weekly trades. And you're okay with the loss. You're just going to enter weekly trades as perfect as you can. You enter monthly trades as perfect as you can. And you just let it happen. Okay? So for example, if all you did was pivot points, and on the very first day of this day, would you buy that or sell it according to what I teach? Yeah, Anthony, I don't know what it is. Yeah, so you're like, oh, I don't really know what's going on here, but I'm supposed to buy it. Great. The very first, I guess that was December. The very first day of January, are you supposed to buy that or sell that? Can you see the theme here? On the very first day, is that a buy or a sell? It's practice. With the demo account, it doesn't matter if you're wrong. Okay? And if you tried buying here, that's all right. You didn't lose. Okay, but you're supposed to be practicing. Supposed to be practicing. Supposed to be practicing. Supposed to be practicing. Okay? And same thing here. Like, this is a sell if you're a bear, and I want you to have a bias too, so you got to practice having a bias at some point, right? This is a sell as a bear. This is a sell as a bear. Okay? So you sold this week. Oh, actually, this is sell. All right, so anyways, you sold the first week, you sold the second week, you sold the third week, you didn't sell the fourth week, you sold the fifth week, but you didn't sell the sixth week. Okay? And what are you going to do next week if you're between the M3 and CPP? Okay? See, I want you to have a bias, let's say, for 6 months at a time. Okay? From January 1 till the June FED meeting. And from the June FED meeting, so we'll just, because that's kind of near the end, so we'll put then from July to December, for example. Okay. Gregory says, Wayne, would you say you have to combine pivot point theory with currency strength at the beginning of the month? It's not currency strength because it is backward looking. So that's not correct. So, but you could try it. I want you to be like purposeful in your demo trading, very purposeful. I want you to become a master of your trading. Okay. So, for example, I'm pretty sure we're going to get something like this in the next month. If that's true, you're going to have to ask yourself, well, where is the support going to be to create that? Okay? And again, you can use any tool you want to try to do that type of analysis. How low is too low? How about this? Anybody think that this might be important? By the way, Jerome Powell is testifying today. And it's very interesting because you go to the Lincoln Memorial right next to the Fed building. There's hundreds of tourists there at any given minute of the day. Then you go a little over to the side. There's a few people at the Vietnam Memorial. And then you cross the street where the Fed is. Nobody's there. And yet the Fed impacts everybody's life. It's pretty amazing. Even the lives of people not in this country. But anyways, Jerome Powell is going to jump in his limo and go to the Capitol building. And I believe you just follow the, it's just up the street. What do you call the big grassy lawn? Where the obelisk is. Anyways, it's just down the street, quite a ways. So this is probably like 3-4 miles up the street, up the hill, up to Capitol Hill, and there you're there. The Great Lawn, the mall. Thank you, the mall. So you just follow the mall up, maybe 3 miles. You get, and it's a slow uphill, and all of a sudden, guess what? The hill is Capitol Hill, and so he's going to be there testifying today. And he's going to talk about the economy, about the virus, about whether they're going to raise interest rates, cut interest rates, what is the election like, and they're going to try to get him to talk politics, of course, which he's going to try to avoid and all that kind of stuff. But I already have a plan for all of that. I already have a plan. But he could say something today that changes the direction of the US dollar. What are the likely things he'll say? Is it likely that he's going to raise interest rates? Is that what he's going to hint? Because obviously you can plan what you're going to say before you testify. So has he written that down like, I'm going to hint to the American public that we could raise interest rates? Okay, well, this is your opinion. And then, of course, you're supposed to put this into your trading. Then you could say he's going to hint that they're going to cut interest rates. Or he's going to hint that they're done. There's no way they're going to do anything. And, of course, if he says they might cut, they can consider cut. Or if the virus turns bad, he's going to cut, all that kind of stuff. If he says that, or is interpreted as saying that, the US dollar will get strong. If he says, that the virus might be bad, but cutting interest rates won't do anything about that right now they feel like this is enough and that at full employment and all this kind of stuff, there's no reason to cut. Okay? All this stuff. Then the dollar should weaken. So I want you to think way out of the box, so to speak, and say we're about 50 pips away from a potential likely bottom. How many people see that as plausible? And that today might actually be the turning point. He's like, there's no way in hell we'll ever cut interest rates. Okay? Now, this corner might not turn like this. It might do this. Okay? But something else turns because we're only talking about dollar here. We're not talking about euro. So maybe Aussie dollar goes up or pound dollar goes up. Okay? US Swissy goes down. Mr. Hivebolt said the WHO warned of a very grave global virus threat, and stocks are at an all-time high. Right? SPX. Stocks, right? Because there's nothing else to do with your money. If you loan the US government money for 2 years, they'll pay you 1.5%. What would fair compensation be if you lent them money for 10 years instead of 2 years? So that's 0.75% per year, right? Equal amount of compensation would be, right, times 10, right? But you're assuming more risk, so maybe you should be compensated more than that, right? But that ain't happening. I think it's only like 1.7%. Amazing. So anyways, yeah, but obviously that's not correct, right, Carlos? But I'm just kind of making a point where you're getting compensated almost nothing for significantly more risk. Yeah, dollar gaining strength on risk off. Okay? But it doesn't mean that won't be challenged, so be careful. And think about these things before you go into these meetings, right? All right, so we did some commodities and stuff. What should we look at? Some dollar pairs? Okay. So we're below yesterday's sell zone, which is today's sell zone, which is funny. So we're below today's sell zone. I think of it as yesterday because I would have done that the day before. So I'm already over here, which is about the same. Okay. But remember, yesterday we were here and it fell during New York. Your plan yesterday would be to sell here today. So I'm already done today, and you would have set this up the day before, and so you should be on tomorrow. But nothing's really happened today. It hasn't. It hasn't not respected your sell. You just haven't made money. But that's what yesterday's plan would have been if you were a bear. Cool. La 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 la. Pound dollar. Is this the sell? Yeah. Oh, I know what I'm doing here. All right, I want to show you this. Being cheeky. Ah, too bad. Our timing's off. I wanted to show you. So I sold it here, and I bought it here, and I was hoping that we'd be in here. And it looks like I was doing okay until just a few minutes ago. This is a 1 minute chart. So even like 20 minutes ago when I started the webinar, or I guess 40 minutes ago when I started the webinar, I was short and long and making money on both. And I was just kind of being cheeky there. Okay. So anyways. Okay. Isn't that funny? Cheeky little monkey. Baby G, what's not supposed to be happening? I missed your earlier comment. Oh, thank you, Michael. Thank you. Grind. Pound. Great looking monthlies. What do you guys think of this entry here? If I asked you to outline this bullish entry, what would you say? You know, I'm going to close this with like a 3 pip loss or something. See how many pips. Yeah, it's really nothing. It's just, I find it distracting. I just wanted to mess with you guys and show you. Cool. So anyways, this one down here, okay, first of all, I know this is very, very bearish, and we have very pro-dollar forces in the market. So why am I long? First of all, this is a weekly sell zone. This is a weekly take profit zone. We hit it on a Monday, which sets up a counter trend trade. Okay. Then, if I may, give it a couple of clicks in. Okay. Double bottom, higher high, higher low, off of a roll reversal. Oops. Off of a roll reversal. What do we call that? Yep. What's the secret word for double bottom 1, 2, 3? Hammock. Okay. So what I'm trying to show here, guys, and what I was hoping to show by being long and short at the same time, is that trying to outsmart the market is not the game you're supposed to be in. It's just being a bull or a bear is the game you're supposed to be in. And if you just follow the rules of engagement of being a bull, or follow the rules of engagement of being a bear over the long run, over the course of a year, you will likely be more successful than you are now. And your trading history will look very consistent. Okay, your trading will be consistent, but your trading history will be consistent, and it will at least seem like you have a bias, even if you don't. Even if you just flipped a coin, someone says, oh, I get it, risk on. And so when it's risk off, you won't have very many opportunities, but you can still make money. And then when it is risk on, you'll crush it. You'll make huge pips. And at the end of the year, they'll look at your trading history and say, oh, okay, I can see it here. You're bullish on macroeconomic activity, so you're at risk on. That's great. And in the periods when it wasn't risk on, you didn't do that well, but that makes sense. And when it was risk on, you crushed it. Okay? And what that does is it's risk-adjusted performance. So when the market is this way, but you're looking this way, your trading volume will go down and your results will be mediocre. Because you're such a good trader, you'll still make money. You just won't make lots of money. And you're not really taking risks because you can see that the market's not really favorable to what you want to do. So you take little shots here. They're pissy little shots, but you move your stop to break even, and maybe you break even a lot. Okay? But even if you, let's say you had nothing but break even after break even after break even after break even in periods when the market was bearish, but you're a bull and you just have nothing but break evens, people would understand it. They would understand it. They would look at your trading history and say, well, that makes sense if you're a bull, and it looks like you managed your risk very well during this period. You see what I mean? Like, you wouldn't have big losses as a bull in a bearish market, because if you have big losses as a bull during a bearish market, you just don't know how to trade. People would see that right away. They're like, I thought you were a bull. Then why are you buying in a downtrend? Like, what are you doing? You're like, actually, I don't know what I'm doing. Right? And that would be very clear. So I want you to think of it like I'm trying to get you out of the weeds every once in a while, because I know you're trying hard. I know you're working hard, but you're stuck in the candles, right? And so I'm just trying to give you a breath of fresh air and a different point of view. If the market conditions are bearish and you're a bull, you're not supposed to have big losses. If you do, people will see it and they won't invest. So if you're a bull and the markets are bearish, your trading volume should drop, vol should drop, right? Meaning the number of trades you take, and your average winner, okay, should be smaller. Now, what you don't want to show is the money gets big. Because they're going to look at this risk-adjusted performance idea and say, well, you were a bull and you were buying, yet the market was in a downward move because of the, whatever. How did you make all this money? How'd you do so well in this period? And what do you think they're going to find 99 times out of 100? Or 99 times out of 99? You increased the risk. You increased the lot size. Okay? So you want to have periods of mediocrity because you are conservative and you're only trading a bias. Okay? People will want to see that. Okay? So you got to pick. For example, Fed is on hold. No. Fed will cut interest rates. Let's do it this way. Over the next 12 months. That's a pretty big statement. Well, you know what? No. Let's do this differently. Let's go back to what I was originally going to say. Okay? Let's do this. Fed will not cut. Okay? They're done. No matter what. Or virus. Okay? Let's say over the next 90 days, you're on one of those teams. No, I do not, Jonathan. No, I am not an introducing broker. No. Okay? So you pick one of these two teams. This one or this one. Your pink toothbrush or your a blue toothbrush? Oh, is that right, Ed? Cool. Okay. Well, I'm a trend trader too, pro, so you have to pick one of these trends, is what I'm saying. And from that, you know what to do. If the virus gets worse, you're buying dollars. Okay? Okay. That's your whole theme. Or your whole theme is the Fed will not cut and the dollar will weaken. You can't confuse the two things and say, well, I'm bullish on the U.S. economy, but I'm really scared about the virus and I'm going to do nothing. Or I'm going to buy and sell like a maniac. I'm going to swing both ways like a broken gate. So you could just say, well, this one. Okay? So now, if that were true, you're going to buy yen, Swissy, and dollar. Okay? That's that. That's what you're going to do for the next 100 days. So now you know what you're going to do here. So now you do relative strength on the other things, like you ask yourself, is the pound weak today? Or is the Aussie weak today? Or is the CAD weak today? Is the Kiwi weak today? And anytime you see a yes, you're setting up a sell. Because you already know you're going to buy Swissy, you're going to buy yen, you're going to buy US dollar. You already know all of that. So now you're just doing relative strength exercises to say, when are these going to be weak? Because when they're weak, boom, you're going to hit them, and you're going to hit them hard. You understand? Or you just make up what you do all day, every day, and have no consistency. Okay? So what I was trying to prove here is that I don't really care if you're a bull or a bear. If you do it right, you'll make money. Okay? You could be selling this and making money. You could be buying this and making money. But if you don't make a decision, you're not likely to be consistent. Ever. Okay? Right on, Prince. Okay. One of the things we talked about yesterday, I guess it was, is setting this up as a double bottom if you're a bull. And that if it dropped below this, there's nothing more to do this week. Done. Yeah, right, sure. You know what, guys? I found a video on YouTube, and then I was going to take a picture of it, and then I'm like, yeah. But I saw a blue Lamborghini Murcielago sitting next to his blue Lamborghini speedboat. The exact same sort of powder baby blue. Now, and we were talking about it like, if you were truly a baller, right, your boat would match your plane. But this guy, his Lamborghini car matched his Lamborghini boat. And I'm like, that's how you do it, brother. That guy's got FU money, right? Because his $300,000 car matches his $1 million speedboat. And you're like, that's how you do it. I know I'm from Canada. So what people do is their snowmobiles match their pickup trucks. Because in the winter, you have to put the snowmobile in the back of the truck to put the extra weight on the wheels so your wheels don't spin on the ice. And of course, you'd be a punk if you had like a blue truck and a red snowmobile. They're like, what is that? And then, of course, how about the RV with the matching car behind that gets towed behind, right? Like, that's how you're supposed to do it, right? Of course, my first car had a broken window. So what would happen is when you drove to school, you'd stop at a red light, and your breath, because it was so cold inside the car because the back window was broken, that my breath would put condensation on the inside of the windshield. So by the time the light was ready to turn green again, you'd get out the scraper and you go scrape, 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 so you can see. Yeah, hey, man, that's life at minus 40. Yeah, no kidding. My friend's car, um, because after a while my car didn't work anymore. So my friend's car, um, it was so bad. Right, it sounds like a joke. It was so bad, he painted it with house paint. Nice. And then one day his foot slipped off the brake and his foot went through the floor of the car. So, if you know Saskatchewan in the winter, it's freezing cold, lots of snow, but in the spring, the snow would melt and roads turned to rivers. Well, he used to put bread bags over his shoes to keep his pants dry while he drove to school. Nice. Oh yeah, he had to push the ladies away. They were crowding around him. I just love the way water splashes inside your car. Yeah, that's how you do it. All right. So, anyways, up, 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 up. Okay. Bulls are playing this as a double bottom. We spoke about this yesterday, and they're going to take it up to here. Okay. If bears are going to rip this down, they need to do it soon. But this predicts the double bottom. Yeah, exactly, Michael Fred Flintstone. Yeah, builds integrity. Pip daddy. Is that right, Ed? A friend of mine, he bought a Jaguar. This was maybe about 5 years ago at a car auction. Um, I think the outside was Louis Vuitton wrap with gold plated hardware on the outside of the car. And on the inside, he had Louis Vuitton leather. Bought it at a car auction. And what he was going to do is he got it cheap because no one would drive it. He's like, that's the most amazing car ever. So, anyways, he bought this car pretty cheap at a car auction. Pretty nice Jaguar, but most people don't want the Louis Vuitton everything. But like legitimate Louis Vuitton stitched leather seats. So anyways, he bought it cheap, and he was going to take everything custom out and put it back to a normal looking Louis Vuitton. But he drove it from the auction, which was like 15 hours away from his house, and people would wave and take pictures as they drove by him on the freeway. He'd stop for gas or lunch, and like crowds of people would form. They're like, that is the funniest Jaguar I've ever seen. Is that Louis Vuitton? Yeah. Anyways, and then he got home and he was driving down the street, and some other guy came around the corner doing like 100 miles an hour, staring at his phone, took the corner wide, crossed over the lanes, and just smashed into the Jaguar and totaled it. And that was that. All right, so anyways, just playing the trade, guys. Playing the trade. The way I look at this is it's not risk on, it's just the trade. And that's sort of the secret kind of intraday trading. It's a lot less fundamental. It's more like the trade you were given. Okay. No kidding, Ed. Yeah. Huh. How cool. Yeah, cars are weird. I've owned at least 100 cars. I don't even know. Maybe more than that. Probably more than that. Sort of a weird thing. Where should we go? Exotics? I don't think I've done anything new on exotics. Nothing's really happening. Yeah, I'm still in that peso trade. So that's been 2 weeks or so. And peso. So I got almost 8% return on investment in 2 weeks. Yeah, 8%, 2 weeks. You're like, oh, but Wayne. Look, compound that annually. So that's over about 2 weeks, right? Calculator. My Windows 10 is messed up. I guess it's time to buy a new laptop because I hate pissing around with Windows. So let's say it's been 2 weeks. I don't think it's been more than 2 weeks because today's the 11th, right? So it's been less than 2 weeks, but let's just call it 2 weeks. So let's say over over the 2 weeks, it will pay me $8, right? So $8 times another 25 periods of 2 weeks. I guess it's 26 if you add the 52 weeks, right? So times 26 weeks, okay? Wait, is that right? Yeah, I guess that's right. 200%. I'm earning 200% a year interest. Yeah, it's an old laptop. So I looked at getting a new one a couple of days ago. I'm just cheap. I don't like spending money. Because my money makes money. I got money in the stock market. Why would I take it out to buy a laptop? The laptop's going to lose money. And I'm crushing it in the stock market, so I don't want to spend money. Yeah, right on, Ed. But do you see my attitude, guys? What if you knew you're guaranteed to earn 200% a year? So my goal with a lot of these trades is to never get out. Okay? Because think of it this way, after a year, I will have collected $208 in interest on a $100 investment. And then when I get knocked out, I get my $100 back. So I look at it as a bond trader. So I want you to look at a different example here. Oops. Where's that lira trade? Let's look at that. Okay. So I've been in it not quite a year, right? I've been in for 9 months and earned 850%. So by the time of the end of the year, I'll have 1,000% return on investment. I'll have $1,000 in interest on a $100 trade. Okay? That means one standard lot will pay me $10,000. in interest, not pips. Which means on a $30,000 trading account, I risk $1,000. Is that a reasonable risk-reward ratio? Is that a reasonable amount of risk on a $30,000 account? One trade for 1,000, or it may be 2 trades at 500 or 3 trades at 333. They're just mini lots, right? So you three trades at 3.5 mini lots each. Okay. You see what I mean? Like you could split it up, but you're risking a total of $1,000 from your $30,000 available. And just interest only, you will collect $10,000 in interest payments from the $1,000 risked. Right? 33% return on investment on the entire account. So what couldn't it be a strategy to get these down, jam them at break even, and get another one, jam it at break even, get another one, jam it at break even? Right, but that's what I'm saying, Ed. The attitude is how many can you stack? Okay? Now, where it gets to be a bit of a challenge is I've earned $850 in interest payments, but I'm up $700 in pips. And very often this should be more like, let's say, this could be 2,000 in pips and you only have 850. So at some point, you're going to take the pips and run. I know that. And you're going to lose sleep over that decision. It's going to bother you. It's going to eat at your stomach. It's going to chew on your brain. It's going to tug at your soul. You're going to, I'm serious. It's really going to bother you. Because if you're like, if you get out now, you'll be up 300% for the year. Let's say your whole entire account. And you're like, dude, 300% is insane. Well, and then until you run against, you know, George Soros or any of the quantum boys that were doing like 30,000% a year. It's because they never got out. They loaded and loaded the boat. And maybe it's easier when you're already making $30 million a year. And you're like, you know what? I'm going to let these run because I'm not going for 300%. I'm going for 3,000%, right? Because you're like, I've already made 30 million, so like I might as well go for $1 billion or just stick with my 30 million, right? So you're like, it's other people's money anyway. So you're like, I'm going to go for 3,000% and be an absolute monster hero. And our fund is going to just have money flowing in from all kinds of sources that say, oh my God, Quantum Fund put up 3,000%. They're a genius. And they're just money will rain out of the sky. And they're like, yeah, we want that because the downside is we give it all back and we only make $30 million salary. Right? You're like, well, yeah, that's pretty good. Right? It's nice to know like, yep. If things go bad, I'll only make 30 million this year. Yeah. So you make different decisions, right? Yeah. Yeah, it was Rogers was the other guy, wasn't it? Yeah. And those guys were smart guys. Those are smart guys. Obviously. So I've never met Soros, or I mean Rogers. Uh, 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 so yeah, so I'm still in that, and yeah, I'm really upset. I'm only going to make 200% per annualized. Okay. What do I need for these trades to work out? What's the common theme I'm going to need for all these exotics? No, volatility is not good for carry trades. Volatility is bad. Risk on. That's it. You know, Decado, Coco, uh, gold hasn't been doing anything for so long that I've just sort of given up on it. Okay? If the stock market crashes, then yeah, gold will get interesting. Okay? Okay? But right now, so it's weird, right? Like the stock market is going up. So I want you to think of my exotic trades as highly correlated to the stock market. Okay? Except, you know, when you're looking at Eurozar, which is what, 600% a year, and Euro Lira, which is 1,000% a year, and you're looking at Mexican peso, which is 200% a year, it's a nice little benefit. Okay? It's a nice little benefit. It's better than the stock market. Okay? Now, I am very heavily invested into the stock market, and I actually have a couple of bond portfolios. But, right, we had a monster year last year. It was up 30%. So getting these is pretty nice, right? The thing is, you got to fully deploy, and that's the trick. You got to work hard at that. It'll take you months and months and months. Oh, I have a wealth management team that does that, Pro Trader. Those are all emerging markets, Javier. Yeah. I think the last time I picked up the phone and called a broker to buy a stock was Bank of America. I bought it at like $4.80, I think. Just about $5. Automatically trading my method? Never. Sounds like a terrible idea. No, but I have a foundation grind, so no, I wouldn't call it a family office. No. All right, so let's see. We did some dollar pairs, we did some yen pairs, we did gold, oil, we did Bitcoin. How about call it a day? Oh, in stocks? No, no, no. I'm in it for the yield. I'm a loan shark, Javier. Right? I'm not really. I'm loaning money to Turkey, for example. Right? Let's go to this one. I'm loaning money to Turkey. That's it. So what I do is I go to a bank in Europe, I borrow euros for free, and then I lend the euros to Turkey. But I charge them 10% a year. Okay? So that's it. I'm a financier. But do I own stock in Turkey? No. Also, you have to, like, my background before Forex was I was a venture capitalist. So, like, I thought buying stock in the stock market was a stupid idea. First of all, they're way expensive. Like, right now, if you want to buy a stock, it's 18 times earnings, which is not crazy expensive, but to a venture capitalist that paid a penny for a share, that's redonkulous, right? And then, of course, I come from a thought process where there's so much incentive for a CEO to lie that even if they don't know they're lying, they're certainly not telling the full truth. Okay? So, if when I buy a stock, first of all, it's going to be in the United States. Um, and second of all, it's a long-term value play. So back in the dot-com crash, not the dot-com crash, the Great Recession, right? I essentially told people, buy anything you think will be around 50 years from now. Right? Buy Starbucks. That was one of them. Buy Delta Airlines. Delta Airlines was at $5 at the time as well. Like, it's the largest airline in the world. I get it. Not a lot of people have money for traveling because of the financial crisis. But what, is air travel going to go away? And who's going to survive? The one with the most planes and the most routes, or the one with a few mediocre planes and a few mediocre routes? The bigger one. Scale is going to be important. And it's a bad time for competition to come in, and most likely a time for competition to go away. So I'm like, yeah, buy Delta Airlines at $5. Yeah, that sounds like a good value play, right? Bank of America, there's no way it's going to go out of business. So if I buy it at 4, or if I buy it at 5, when is the government going to bail them out? At 2, at 1? I mean, I'm not even risking the full $5. I'll get bailed out. So I'm like, I'll buy it. Right? That kind of stuff. Oh, did the yen trades? I don't know. We can take a look. No, I still have 2 Aussie yen short trades that are profitable. I got 1 euro yen. So let's see. Yeah, I think not a lot has changed, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 profitable trades right now. Right? I think I'm up 400 pips for the week, something like that. So anyways, yeah, not a lot has changed. See, you can make 400 pips practically with your eyes closed, if you have a strategy and a plan. Now, obviously, I need to worry about this. So I can start putting together some plays on Aussie here. This is kind of wild. Yeah. And it's funny how the opposite is true, huh? Right? So anyways, that's all. Have a wonderful day, everyone. I appreciate you being in my life and on my team every single day. You guys are good people. You have good karma. You ask good questions. I think you're going to make it. I think you found your niche. This is it. So keep working hard, huh? Just make sure you're not just throwing a bunch of trades down and seeing how much money you can make. That doesn't work. You need to practice properly. Okay? You need to find one little tiny part of the big trading and master that. That's how you get better. So for example, I'm in a strategic negotiation class at Harvard right now, and we were studying Chechnya and Russia having peace talks. So how would you handle a situation like that? There are so many variables. There's history, there's language, there's religion, there's money, there's, emotional wounds, there's political pressures. How do you handle a negotiation like that? Well, instead of trying to tackle everything all at once, which is impossible, you can't even get your head around it all, the first thing you can do is establish that you both want some sort of peace. If you can't even get to that, then it's over, right? So trading, don't look at trading as all encompassing everything, right? The first thing you should negotiate, if you can both agree that you want some sort of peace, whatever that becomes, you both want an end of the fighting and the death and the bloodshed and all this. Then you say, okay, well, let's focus on something that we can achieve. Let's start with humanitarian aid for the civilians. When can we get the UN in there to drop off humanitarian aid and medical supplies? Things like water. We'll start from there. Let's just start the conversation around that. Okay? So where are you going to start your conversation with Forex? Like I said, maybe it should be trading when the market opens on Sundays. Trading on the day monthly pivots come out. Be there at the right time, at the right place, no matter what, you're there. And because it's a demo, you're not even thinking anymore. You either got a setup or you don't have a setup. Right? And you do it. And then the next month, do it. And the next month, do it. Next month, do it. Next month. And over time, it'll either click with you and you're like, this is something I like, this is something I feel comfortable with, this is something that I do, and you will add it to your repertoire. If you never quite hit it, you never quite get it, and you just don't even believe on it, you'll eventually drop that and move on to something else. And you might end up being mostly a scalper. I think that's where I started, and I think that's where most people start. But I might do something different, but we'll both make money and we'll both love Forex, and we'll both get together a couple of times a year and toast each other with a drink and say, hey, love this thing Forex. Yeah, Grind, but you're about a day late. I think the stock price jumped by 60% yesterday. So that's ridiculous. That was so... You should have been on that 2 days ago, right? But yeah, it is big news. All right, peace on earth. May the pips be with you. May your profits be above average. See you tomorrow.